Hello everyone, welcome back. We are now in chapter 5, and in this chapter we'll be discussing item-wise item on the profit and loss account. Please recall, till now we have discussed the basics of accounting, the various accounting concepts, and the accounting process that is involved in the preparation of financial statements. In chapter 4, we have also had a brief look at the major financial statements. We've taken three examples of three companies, and we just had a cursory glance as to what the statements contain. That's the profit and loss account, balance sheet, and the cash flow statement. In this chapter, we will take a detailed look at profit and loss account. We will take what is known as the CMA data. Now we'll have a introduction as to what CMA data is, and then we will take item by item what are the various entries that can occur in a typical balance sheet and P&L account. So in this chapter, we'll be focusing on the P&L account. So this could be a lengthy chapter, and it is broken down into various segments. So in the first segment in 5.1, which we are going to discuss right now, we'll be discussing about CMA data. So you might have heard the term CMA data many times in your career. Even if you are not into advances, you might have heard this from your colleagues who are in the advances department. Advanced parties frequently use this term. So CMA data, actually CMA stands for Credit Monitoring Arrangement. Actually, this was introduced by RBI a long time back after discontinuing what is then known as the CAS, right? There used to be a scheme called CAS. There is a credit authorization scheme. These were the days when credit was a scarce resource, and it was a very valuable resource. So it was like say 100 crores of available funds in the economy chasing some a demand of 150 crores. That means there are various projects, like various requirement from parties who actually might have needed 150 or 200 crores, but the actual available credit was only 100 crores. So under such a scenario, obviously you have to allocate, right? What we usually call the rationing, right? We have to ration credit because it was a scarce resource. So during those days, these schemes, the CIS and the CMA, actually emerged. But then presently the situation is quite opposite, right? Today we have surplus funds, and the excess funds, like that 100 crores, are actually chasing the requirement of only 70 or 80. So while the requirement today is only 70, 80, we have plush funds from many banks and many other financial actors trying to meet the same demand. So today obviously there is oversupply. So the CAS actually is not relevant today, and even CMA, which actually grew out of those days, might not be relevant, but the format has persisted, and banks follow this CMA data, right? So what actually CMA data is? It's like in simple language, it is a table, right? So what you actually have in a CMA data is, I'll show you what are the actual components, but for simplicity, let us assume that it is a P&L account and a balance sheet in a modified format, right? It is in a modified format. The modification is actually a condensed format, right? What we actually do in CMA format, we take the P&L and balance sheet of a company and try to compress it, right, into a very small format called CMA format. So in CMA format, you actually have data for the past 3 years. For example, we are now in September 2013. So what the CMA data actually contains is the data for the last 3 years, right? So since the last available completed year is 2012-13, that means we have audited financials for the year ending 31 March 2013. So the CMA data provides data for the last 3 years actuals. So we have 3 years actuals, 2011, 2012, 2013, and then we have projections, right, for the next 2 years. So what we do is we provide a condensed P&L and a condensed balance sheet for the past 3 actual years and the 2 projected years. This is basically what a CMA data is. Please note that the control which RBI used to have earlier is now not there. So banks actually have the flexibility regarding the CMA data. Some banks actually call for even last 5 years data. Like I think banks like Canara Bank, for example, I'm not too sure, but I think this was my guess. No, it was a long time ago. Canara Bank used to have data for 5 years, past 5 years, whereas some banks actually call for past 3 years. So this varies from bank to bank, right? But actually that is the crux of CMA data, right? Some financials for the past years, usually it is 3, will be there in the next 2 years projections. So the 3 years data is actually culled from the balance sheet and the P&L of the company. So these are actual figures, right? And then the company gives 2 years figures, which are projections. These are actually what the company thinks are more likable figures for the next 2 years. Like what is the turnover they expect for the next year. These are not actual figures, right? These are estimated figures. This is what the company has plans to achieve. So based on this, the company applies for various credit facilities from banks. So please note that CMA data is actually not a Companies Act requirement. For a company, if it prepares the balance sheet and the P&L account as per the requirements of the Companies Act and it gets it audited, therein ends the work of the company as far as financial statements are concerned. CMA is not required for auditing purpose or for the requirement of any statutory obligation. CMA is actually exclusive only to the banking industry, right? Companies who want to get credit limit sanctioned by banks, whether it's working capital limits or term loan, various facilities, to approach banks, they submit an application, right? So usually to obtain credit facilities, companies have to submit application. So along with this application, they enclose what is known as CMA data, right? This is all the text part, right? And then we have the financials part. So these financials are submitted in a format called CMA data. So please remember that this is only a banking requirement. This is not a statutory requirement, right? If a company that is not availing any credit facilities from bank, it need not prepare CMA data, right? That's not required for a company which is not availing any credit facilities from banks. Only a company which proposes or is availing credit limits from banks need to prepare CMA data, either at the time of sanction or at the time of renewal. So the most important point that you need to remember is the data that is required for the CMA data is already present in the balance sheet and the P&L account. See, these are not new figures. See, you should understand that CMA is only a different form of presentation. So you have a P&L account prepared by the company. You have the balance sheet, P&L taken by the company, and then we recast, right? We recast them into a separate format, a new format called CMA data. So this is not, the figures are not changed. Okay, this is only a different form of presentation. Which this reclassified format, you might ask what is the fun in reclassifying figures which are already there, right? So what actually happens is this reclassified format will provide classification under various categories. This is actually more useful for banks. See, the Companies Act was not designed for bankers. Please understand, the Companies Act, we already discussed that the format we have in P&L account and balance sheet is based on Schedule 6 of the Companies Act. But the people who designed this Schedule 6, they didn't have bankers in mind, right? They must have had all stakeholders in mind, of which lenders are one part. So this is not specific to bankers. Now bankers, for their day-to-day work, to analyze the financials of a company, they have prepared a separate format. This is actually proposed by RBI, and when banks are all following, they used to follow, right? Even now they have a discretion, but still banks are following, right? So this is not a new data. This is only reclassified data in a format that is more helpful for banks in their analysis. So CMA data actually contains 6 statements. It have a operating statement, which is actually the P&L account. Then we have a balance sheet, and then we have a statement called comparative statement of current assets and current liabilities. We have a calculation of MPB, funds flow statement, and a ratio analysis. These are the various statements which we encounter. Usually what happens is when you see actual CMA data presented by the companies, please note that these are actually most of them are prepared in the computer. These days companies or their credit consultants prepare them in the computer. So actually these are the only 2 statements that are prepared. Rest of all they're picked up from these 2 statements because they're all formula linked. Usually these are prepared in MS Excel. So if you fill these 2, the rest 4 gets automatically populated, right? So if you prepare these 2 statements, the rest 4 automatically gets populated. So that is how the software is usually prepared these days. So please note that CMA data is a standard format, right? Since it is prepared by RBI once upon a time, and now all banks are following it. So whichever bank a company may approach, say a company might approach SBI, or it may approach say Canara Bank, it might approach Bank of India or Bank of Baroda. So any bank it might approach. The company prepares a CMA data. This is a standard format. This doesn't vary from bank to bank. Banks, for their internal purpose to analyze companies, may have their own internal formats. This might vary from bank to bank. So for SBI they might have a separate format to analyze financials. The format might differ from bank to bank. But for a company point of view, the CMA format is a standard format. Now the company can approach any bank with the same set of financials. The format is known as CMA format, right? In your particular bank, you might come across a CMA data that is slightly different. For example, your bank might ask your customers to submit in a slightly modified CMA format. That might be possible because now it is not mandatory, right? It used to be mandatory earlier, but now it's not mandatory. So banks might make a few modifications as per their individual requirement. But usually that shouldn't be an issue if a company prepares CMA data as per the common format, the standard format that is followed usually throughout the country. That shouldn't be a major issue, right? But you should know that banks, for their own internal purpose, that is when preparing their process notes, that is when preparing their what is known as the appraisal memorandum or the process note, right? In that process note, they might have a separate format that is the internal format that might vary from bank to bank, right? CMA data is such an important data for a credit officer because this is the base for credit appraisal for a advance officer. This forms the base, right? Okay, the past actual data can be actually picked up from a P&L balance sheet, and you yourself can prepare the same data for the last 3 actual years. That you can do, but the projections are actually given by the company. These are not done by the banker. This can be done by the banker, though usually company prepares all the 5 years, but this is to be done by the company. So this is what company's plan, right? This is the company's plan for the next coming 2 years. What is the turnover and what are the expenses they are likely to incur? What is the profit they are projecting, and what is the balance sheet? Like what are all the liabilities and assets they are projecting? So this data comes from the company. So this is the base data for credit appraisal in any bank. So as we have already discussed, CMA data is a condensed and abridged version, right? This is not any new data coming from heaven up above. This is a data that is already presented in the P&L balance sheet. This is only for a purpose of more classification, right? So take for example, a company might have a different non-operating income. So as you know, a company usually makes income from sales. This is the core activity of the company. But company can also make income from other revenues other than sales. Though this is the major income source, there can be other income, like say for example the company might be having some FD in a bank, so it earns interest on this. So this interest is a non-operating income in the sense that it is not a core activity of the company, okay, but the company has earned some income. This is called a non-operating income. So the company can have so many items. For example, it can have, say, take for example, it has 25 such items, like profit from sale of shares, profit from sale of machinery, mutual funds, rent income, gain from forex value variation. So all these incomes, let us say there are 25 such items. But as a banker, you're not worried about the individual breakup. What you consider is only the total of the non-operational income. So what you do in the CMA data is will not have space, will not allot space to 25 different items of non-operating income. CMA data is a very abridged and condensed format. It is a very short format. So in it we'll have only one single line for non-operating income. So in this income, we add up all the 25 items and put one single figure. So in the process, what happens is a company P&L account and balance sheet might have so many entries, hundreds of entries. But for example, a company might have say 200 items in the P&L account, some 300 items in the balance sheet. I'm speaking of individual items, like say, take for example income. It might have so many different products, product 1, product 2, product 3, like that. Similarly, we spoke of non-operating income. We spoke of then say some other manufacturing direct expenses. There's so many of them. See what CMA data does is it clubs them under various important categories. We don't have space for many categories. We club them into key important categories and then we reclassify, right? What we do, we reclassify the P&L and balance sheet of the company into this particular format known as the CMA data. So what the output is finally is a short format, a condensed format, which is more amenable to financial analysis. So that is what you need to know about CMA data, right? So in the next chapter in 5.2, when we start digging deep into individual item, we'll be discussing in the next segment 5.2 about sales. There I'll show you a blank format of CMA data. So you'll get a better idea of what a CMA data actually contains, right? We'll see you then.